Oh, some people can actually see me now. Mm, um, well, I'm actually testing this live, so if anyone is watching me, I would want to see some comments. Hello, Hamad Rashid. Hello, Marcus Clare, Chidi Godwin, Amy Johnson. I always see you in my comments. Mm, it's kind of noisy here, actually. Hello, Hamad Rashid. Hello, Marcus. So, well, I just wanted us to talk, and it's actually the first time I'm here live on YouTube. So, I'm going to answer a few questions, and we're going to talk about price action and where we're going to next. Well, where we are most probably going to. No, there is no guarantee with this, so I'm just going to connect my mic here. Um, hello. Mm, okay, I think we're good. Uh, softball. Hey, Lady Carlil, I think. You guys let me know if you can hear me. I just connected my mic. I don't know if it's working yet. Yeah, I'm just gonna inform people in the Discord group and over on over on Telegram that I'm live. That I'm live now on YouTube. So it's been a terrible, yeah, it's been a terrible time in the market. A lot of problems. All right, cool, cool, cool. All right. Let's see our live with the Saito, what logo? I think. Yeah. Hello, El Pablo. Yeah, I'm not gonna say that name here. Terrible name. Uh, I'm gonna inform on the Telegram group too. Okay, it's already routing to Telegram, so oh, cool. So it's really been a terrible time in the market, and yeah, a lot of people have been asking me why I, go in now. I haven't been here on YouTube for quite some time, and I really want to start, making more videos for YouTube, making more educational videos. And so a lot of people have been asking me, why did I start accumulating now if I think Bitcoin is really going to, some crazy low levels? And I've explained that I've explained it over and over, but some people still do not understand. So I just wanted to make this live. We explain price action, then we talk about that, like where should we start DCAing. By the way, on my TikTok video, I was talking about 0.618 gold, 0.618 ratio, Fibonacci ratio. And that 0.618, this is it here. Yeah, you can see that. This is it here. So we're going to test that in this live and see if Bitcoin is going to come down here. So this is considered like the center, yeah? So mostly price bounces somewhere around here. Around the 0.618 is like the strongest Fibonacci ratio. Also the 0.5, but anywhere between 0.38, 0.5, 0.618, this is where you expect a bounce. Where you expect a retracement back from price, or you expect it to have massive resistance. That is if it's going up. But we can see the stochastic here. Yeah, we can see the stochastic here overvalued, and this is on the 4-hourly time frame. So we expect it to most likely go to the downside. And here, this is actually something that I would like to show more of here on YouTube. Anyway, let me see what you guys are talking about. What's the chance of BUSD to drop? Well, we cannot really know what stablecoin is going to go down, but I just made a bet, I would say, by going to BUSD. Normally, hello, Atnan Murad. Normally, you should have your funds spread over all stable coins like USDT, BUSD, USDC, all major stable coins, because you don't really know which one is stable enough to have your funds. So that's like the best one to have your funds. The best ones to have your funds in. Being in one single stable coin is also risky. Well, they should all be stable enough to keep your funds safe. But with current times, we really do not know. We really do not know what is going to happen, to be honest. We really do not know. And it's not like you can do some kind of technical analysis on stable coins. Well, they are meant to be stable, so you cannot be doing TA on them. What? When is it gonna go down? It's gonna be fast then up. Well, I don't really think it's going to be that fast as some people might think. I think, when Bitcoin reaches its price target, like the one we were talking about on Instagram the other day, we're going to do that back now. If you go to the 1 day time frame, and the daily time frame now is already in the underbought region, so we could actually see some kind of bounce from here before we continue going to the downside. Yeah, so we were on Instagram the other day talking about this price target here, how we reached this price target here. I don't know, some of you were not there, so you couldn't follow up. Okay, so let's look at this from the wider scale, yeah? It's always important to remind yourself about where price is from before you continue with where you are. Yeah, so we talked about this. We went up here, came back down, then went to the all-time high. I always begin my predictive analysis videos that way for people who always come for the videos, predictive analysis videos. Bitcoin dominance still low. Yes, the Bitcoin dominance is still low right now, so we don't know. I'm going to talk about that. I'm going to talk about the Bitcoin dominance. So this is Corona crash right here, and then we rallied back up. Now it's important to see that this 2018 chart right here, and I was actually planning to make a video on YouTube the other time before I was really interrupted by some matters. The dump we're witnessing right now looks kind of like this one right here, the triangle, the descending triangle here. And I wanted to talk about this the other time, but we dumped right here, went for the ride, and Corona, the pandemic, I don't want to say Corona on YouTube, and I said it again. So the pandemic took us right down to here, and we rallied again. The descending wedge here, we escaped from it, then went for the all-time high, created a double, actually, yeah, we created a head and shoulders. So you guys are just going to follow along as I explain what I see here, and you really have to learn how to see these things as they unfold. Yeah, so we could take this like so. You could also see it like so if you may, or like so. But anyway, so where is it? Okay, so this right here is the head and shoulders. That's the head and shoulders, and this, let's change the color so that it brings about some difference, is the double top. So head and shoulders, but if you take this as one structure with this as one structure, this will be a double top. So then it broke to the downside. It broke to the downside from here. This I was explaining on Instagram. It broke to the downside from what? From a bear flag. So you have your bear flag here. Yeah, you have your bear flag here. This is on the daily time frame. Okay. So yeah, this is on the daily time frame. All right. So we have a bear flag. We have we have this. So we have about 3 structures here that are just pushing us down. Like there is no other way we can escape from this. We could not just come right back up. So we have 3 structures. We have this, head and shoulders. No, let's take this head and shoulders from here. I think it will give more confluence from there. Now you have to know that patterns are actually subjective. That's the problem with patterns. That's why you would not find indicators Any indicator that uses patterns is probably some fake stuff. Patterns are subjective, so you have to actually see them by yourself. It makes it a bit difficult for some people because you have to have a recognition for patterns. Naturally, you should be able to recognize stuff as they unfold, and you like compare them with things that you know already. So if we have a head and shoulders here. Yeah, I know I've not bought the what trading view premium. I don't need it. So if we have the double the yeah. So we have the head and shoulders here. We have the head and shoulders pattern here, and we are just going to look at their targets as we go through. Looks like a double top. What looks like a double top? What was your first trade? Well, my first trade was, we'll talk about me someday, not today. Okay, so when you are doing this, it's important to always have them. And it's good that I'm doing this live so that you really cannot say that they don't work, you know. All right, so, one of my first coins was actually XRP. And I don't really like the coin, but unfortunately, that was one of my first. XRP, Ethereum, Cardano, and later on I bought Aave some time ago. I made a lot of money from Aave. Okay, so we have the head and shoulders here, yeah? Now, if you have any questions, just ask them now because, yeah, I'm drinking tea. A lot of people ask really, really funny questions sometimes. Now, they are funny, but, I like to teach people that don't understand. I don't blame anybody for not knowing. I believe we all learn because of other people, so it's okay to not know. Why don't I like what? Why don't I like what? So yeah, so we have the head and shoulders here. We take this is how you measure the target, yeah? So you take from the top right here and you bring right down here to the neckline. You take your measurement and put it where it broke to the downside of that neckline. Now you will see that here, inside of this fractal here, price is bouncing off of that neckline. It's actually respecting it. And I was talking about this some time ago on YouTube, and you can see it happening here. So it's good that I'm actually doing this video live. I am really happy that I'm doing this live so that everybody gets to see what I am doing. And okay, so we take this and we put here where it broke to the downside. Yeah, we put our measurement where it broke to the downside of that neckline. Now, by that, we are assuming that Bitcoin is going to go to 26. I hope everybody can see this. We are assuming that Bitcoin is going to go to $26,554. Yeah, are we putting it perfectly? We have to put it perfectly to the dollar. You always have to measure your targets to the dollar. I hope everybody from Instagram is here because some people really need to know some stuff. Live on YouTube now. Oh, Come on. Someone in the Discord group said that he would personally go to hell just so that he can beat the hell out of Sam Bankman-Fried. I mean, that was really hilarious. I laughed I cried my eyes out. Live on YouTube now. Let's study the charts. Okay. I think I'll be doing more of these types of videos where I just come online and we look at the charts, we explain what has been going on, we try to look at what is going to happen together. I think that will really be nice. Okay, so if we are putting this perfectly, we gotta put it in a different color so that we don't miss. In a different color, it will be like, no, this color won't be. We have to put it bigger. If it's bigger and it's something like white, yes, that'll be it. Okay, so if we look here, by this we are saying that price is going to go to this. We are saying that price is going to go to $26,255. So we come here, if we go to the date and range. Now, I want you to look at how long it took for price to actually obey the prediction. So let's say we were here. Let's say price was here and it broke to the downside here, came down, retested this neckline. So when you draw a neckline like so, it does not only obey it here. If this neckline can be obeyed right up to here, it really does not end. Yeah. So if it broke this neckline here, came back up, retested the neckline and went down here, then you know that, yeah, it's going to go to this target. Yeah, it has to go. Now you see it retesting it here again and plummets back down. And so the target of the neckline is $26,254. But as you can see here, it actually took 127 days for that price target to be met. This is why when some people come to my videos and they are like, you said it's going to go to this. It's funny to me because predicting that it will go to this target does not mean that it will happen tomorrow. It does not mean that it's going to happen next week, next month. No, it can take years, but it will surely happen. Okay, so the next fractal here is the bear flag. So this is how you get target for bear flags. You have a decrease in price, like so, continuous decrease in price. You have a consolidation that goes to, I have a video on this, I have a video for this on YouTube where I talk about bear flags and bear pennants, bull flags. Yeah, I have a video for this on YouTube where the title of the video is Teach Me Like I'm 5, I believe. So yeah, so we have this price consolidation here, but the consolidation is slightly going to the upside. We have a rapid price decrease, not really rapid, but a slopey price decrease. It goes like so and goes into this price consolidation here. Now somewhere around here, I had already talked about 20K. I think it was somewhere here, and you might be like, how did I know about 20K? Because as I told you, Head and Shoulders or whatever pattern you may be looking at, they are all subjective. they are subjective in nature. So not nature, but they are subjective in the way you look at them. They are not objective. So it depends on how you look at them. You could look at this at like any way you want to. You could look at this like so. You could take like so, and this will be another pattern that you're looking at. And if you are bullish anyway, it really does depend on your bias. If you are bullish, you will put it like so and call this a descending wedge, you know, and that could work for you, but no. So I go with a lot of confluences to verify if the pattern I'm looking at is actually what I am supposed to be looking at. So if you take from here, yeah, if you take from here to here, like so. Oh, what does it say? Oh, should you measure from the weeks? On higher time frames, I measure from the bodies. Yeah, because the weeks may give you wrong values most of the times. Yeah, they may give you wrong values most of the times on higher time frames. On higher time frames, it's better to measure from the bodies because the body is where the price closed. That will give you more accurate values than the weeks. Why don't I like XRP? I just think it's trash. Yeah, someday. I'm seeing a bull flag on Algo and ETH on the 30-minute time frame. It just looked like a double top. Okay. All right. Let's hurry up so that we really catch up with time and stuff. All right. So here we are. Yeah. Here we are. If we take the target for this bear flag, as I was saying, let's just go right in so that we don't really waste so much time here. If we are looking for the target of this bear flag, and this is really a perfect bear flag. If you've been a follower of this channel for quite some time, then you will know that this is a really good bear flag. Like, it's a textbook definition of a bear flag. How do you get the target? You take your measurement from the body here at the all-time high. Okay. So this is the all-time high here. You take your measurement from here, yeah, on the body of the candle. So you take your measurement from here to the body of the lowest part of that flag here. So in a bear or bull flag, you actually have two structures, and price will usually, it will bounce. Now, you have to understand that these are not like definite to happen. You know, it's not a must. I always say this, it's not a must that it should happen the way you see it. So if you are looking for the target of this bear flag, if you've been a follower of this channel, then yeah, you've been seeing this bear flag for quite some time. So to know the target of this bear flag, you have to take that measurement like so, and you put it where price broke to the downside of that flag. So from here, I am measuring from the bodies. Now, how do you actually measure this stuff? You have to respect price as much as possible. Your trend lines have to touch the closes of the candle at least 3 times. And you have to respect that as much as possible, which means you can't come here and you put like this. You have to put like so. So it is here 1, and then you go here 2. This is a perfect close. And then this is the third one. This validates your trend line, so you can trade based off of this trend line, or you can invest if you want to say, or perhaps you can sell based on it. If the price broke it and closed below it, like so, like here, it broke here, closed below it, came back here, tried to close above this, confirmed it by going to the downside, and you have this candle here, this selling pressure here with this candle in a bearish engulfing pattern. You know, it's on its merry way to the downside, and that you see it coming down here. Now, so that's what you have to be looking at. How do you get the target for the bear flag? You have to take this from here and you put where it closed to the downside of that candle of yeah. So if you take this, well, okay, so you have to put it here where it closed to the downside, exactly where to the dollar. You need to do it perfectly. Okay, that now will make you know that Bitcoin is going to, ladies and gentlemen, 20K. That's how I got 20K. Now you know. So yeah, when I did this, now I actually did something different to confirm. It's not like I was waiting for here, because here I already knew that Bitcoin is going to 20K by here. And yeah, by here I already knew. So yeah, so that's how you get to here. But what you also have to understand is bear or bull flags have 2 main characteristics happening between them. By the way, from here, let's put this back here. Okay. We're not using this one. So we have this here and here. Now this is not being touched 3 times, I know. But it's to the resistance, so it's not really important for this trade. You see the double bottom happening here and it comes right back down. Okay. So we have it going down here, right down to 20K. You have to understand that as it is a bear flag, it has another target hidden within it. That target is the ascending wedge here. So this is the ascending wedge. You also have to put that in mind as it goes to the downside. How do you get the target of the ascending wedge? The target of an ascending wedge is the bottom of the wedge. That's the target of an ascending wedge, the bottom of the wedge. So this is the bottom of this ascending wedge. A perfect ascending wedge should be 45-degree angle. These are some things you should know. Okay, so this is supposed to be the bottom of this wedge. This is supposed to be the bottom here. To get a straight line, we go here. No? Okay. So this is supposed to be the bottom of this wedge, yes? But here, look what we got. We have a candle. We have a candle closing below that bottom. So this candle here is closing below the bottom. Another thing you have to know, candle closes are also important because if a candle closes to the downside, with majority of it being in the downside, it is really confirming that prices are going to continue going down. But if it closes to the downside and majority of the candle, or say 80% of the candle, is to the upside, you should be more skeptical of going, selling all you have or going for a short. Just a little tip. More skeptical here means you will have to look for other confluences, to confirm what you are looking at. Yeah, like this candle here, it closed to the downside, which means prices are still going to continue going down. But what prices will continue going down, you might ask? The price of this bear flag. Now, the ultimate target of an ascending wedge is the bottom of the wedge, as we have said. But how do you know where exactly prices are going to go when price closes from here? You measure from here to here. Yeah. So you measure from here. Oh. Now, also note that some people would want to measure the target of a bear flag from here. So they take this measurement that we have taken from the all-time high here, and they put here. That is a conservative target. That is a conservative target. And if you even do that from here, you will see something happening here. And this is one of the reasons why I continue to say the news really has nothing to do. Look at where it is coming here. It is reaching at 24,000. And at this time when price was crashing down here, or everybody was saying it's going to end at 24K. I even made a video talking about we have 24, 20 and 17K where price could bounce from. Which means from your analysis, you should also factor this in. If price comes and closes above this area here, forms like a bullish engulfing pattern, and you are seeing the RSI or stochastic in the undervalued area, you should start reconsidering the idea of price going right down to 20K as it would if you had measured it from here. But normally, this is a bear flag, so you should be measuring it from where price broke down from the flag, not when price is still in the structure. Where it breaks from here, that's where you take your measurement. Yeah, that's where you take your measurement. But as I've told you, these methods really work well when you are swing trading or you are investing for the long term. They work a lot. Because if you want to use only them for normal trading, like futures trading, that is going to cost you a lot. What? Yeah, I'll show you the trend-based FIB extension, how to use it. Okay, so yeah, so that's what you should be considering here. When you see this happening, you take this from here and you will have your price reaching down here. Yeah, you will have your price reaching down here, and we see that this was much more accurate than only coming here. So that is how we found ourselves right down here. Now, as I was about to say, when you take from here, so if to know where the price will go from here, you just have to measure from here to here. It's all about measuring the breakouts, yeah? So you measure from here to here, then to here. But look at what is happening. It comes down here, and this candle closes under this target. So it validates the entire structure. That's how you follow price around. You are just waiting for the next validation. You follow it and it gives you the next validation and you follow it. If it came here and went back up, then you should start reconsidering your options. That's how you do. It's not like you make a prediction and it all works out in a day. No, you are following price all the times, waiting for the next validation. So yeah, that's how we found ourselves down here. We came down here and another bear flag, and then we are coming right down here. Now, this is not a perfect bear flag, by the way. Okay, so we found ourselves here in this fractal. Now, this is a descending triangle here, and I hope you can just see it and understand that that's a descending triangle. I'm just going to cancel all of this and so that we go back to how it even is a descending triangle. Now, if you look at it, you will see from here to here. So you have a close here and you have a fake out actually. Yeah, you have a fake out here because you want to respect price as much as possible. That's what you want to do. In every price structure, what you want to do is respect price. Whenever you're drawing your trend line, you have to respect price as much as possible. So here we have a candle close here, and this green candle closing back up here keeps price above so you don't easily just plummet. And here, up here, we have this structure. You want to respect price as much as possible. This is it here. This was the breakout candle. This candle right here, this was the breakout candle. So right up to here, price was lingering into this triangle and it broke to the upside. Now I had a thesis that we are in, and this is it. It's not like you can't see it. So if you come here, no, I think it is this one, the arc. Yeah, you have from here. If you put it here and no. All right, yeah. I had a thesis that this could be I had a thesis that this could be an inverse cup and handle pattern. And with inverse cup and handle patterns, you will want to see price go to the upside first. When it goes to the upside, and I'll tell you why I changed my mind about it, continuing to 24, 25K. When it goes to the upside, it will then plummet. Now, if it actually went to the upside, you will see a structure that looks like so. You would see a structure that looks like so, and if it's to plummet, it will go like so. Now, guess what this here will validate? This will validate something that looks like so. Another bear flag. So it's not bullish in whatever case you want to look at it. Okay. All right, so right here, we had this structure, this descending triangle. The bias for this triangle is for price to go to the downside. That's the bias here. And so everyone starts to short somewhere here, like aggressive traders, they start to short somewhere here. So price would usually go to the opposite direction of the trend, or say the opposite direction of where it was normally supposed to go. So here, normally the bias for descending triangles is for price to go to the downside, and the bias for ascending triangles, ascending triangle will look like so, is for price to go to the upside. So we see that price will first come to the downside in an ascending triangle before going up. That will be the bias here. So yeah, I hope, let me see if you guys got some questions. Okay, so how do you get the price targets for this move here? You have to draw your lines again. So you come here you see this close here, you know that it does not really constitute part of this. It goes to the up. Why go to the upside first? You know, this investing or trading or whatever. Look, I'm just going to show you something here. I'll show you something real quick. It's all about liquidity. Everybody is shorting here. That's why price will go to the upside. The market maker has to win first. I think I posted this on Instagram that we have a diamond pattern, and the bias for that is bullish. So I really did expect price to go to the upside first here, and it going to the upside was gonna confirm my thesis, you know, for 23. But I was actually hoping what I really could bet on would be 21,500 to 22,000. That's what I think I made a video about that. So yeah, to liquidate, of course. So yeah, so it has to go to the upside, and you can also see this as a double bottom here. Yeah, so it has to go to the upside most of the times anyway. Most of the times price will go to the opposite side of the general bias. So if the bias is that price goes to the downside, price will usually go to the upside. That's why they say Bitcoin always does what the opposite of what everybody thinks. Yeah. So yeah, that was the bias here. It went to the upside, yeah? So how do you calculate where it's going to go to the downside? And this actually came to my mind, and I don't know why I did not immediately short here. I started shorting at about 20,800. Anyway, so yeah, if we take from here, yeah, let's take from here. But from here, it will not work because the price is not touching it here. But this is the kind of thing that I will do sometimes. I will take from here and put like so. Because the important thing is that you want that your lines, these lines should always touch up and down. They should always touch candle closes. That's what you want. You don't just want to take it from here down to up. No, you want that they touch the closes, candle closes. But if you take from here, you want to put it here because this was the move to the upside. That's what you want to measure. I was on a live stream the other day on Instagram, and we did this perfectly. Okay. Okay, so if you put it here, if you put this here, okay, if you put this here, you will see that price literally bounced off of the target. I mean, you could sit here, from this price action here, you could say that Bitcoin will bounce at 15,578. And that is like what happened. It bounced off of 15,638. $100 difference. Part of the reason why I always say take profits before your targets. Don't wait for your targets. Take them before your targets. And this brings me to the topic of why am I not waiting for 3K before I start investing, or why am I not waiting for 7K? Why am I, not waiting for 10K? If I am so sure that price is going to go there, why am I not waiting for it? Why am I just going in now? Because you don't want to miss out. If if you sit and wait and say price does not go there, yeah, you will have to wait another 2 years, 4 years, I think, yeah, around 3 years before you can get prices this low again. And you may not even get them this low. What if it never comes back down here? you know. So you need to factor in your risk to reward. You need to factor in your risk to reward. Now you have to measure this. You have to measure this from where it broke to the downside of the descending triangle. So yeah, that's your first price target, the first touch. So it touches this close here and this other close here. That's your first target. That's how you get your first target to the downside here. And the second target is given by from this close here to the next close here. That's how you're going to get your second target. You take that and you put again here. So that's somewhere around 14,262. 14,262. We'll see if these things happen. Yeah, we'll see if they happen, because when they happen and we did it live, then it's really clear that this thing does work. But the only thing that annoys me most of the times is the idea that, you know, this did this and that's why it happened. I really think there is some natural order of things that need to be restored after some time. And so this might be it, you know. This might be the natural order of things being restored. Who knows? So yeah, that's like the target for this structure right here. If we were to get the target of the entire structure, then we will be looking at this one. We will be looking at this one. So we will need to take this. We will need to take this, and we find its top here. This will be the top. Now this is just so that we know where to take the measurement from here. Yeah, so if you take the top from there, then you are not measuring from here. This will be wrong. You have to measure from its own, where the fractal begins, and that fractal begins here because it found support here and it found resistance here. So you take from there. That's where you measure. Now this is the lowest part of this fractal, because this right here, well, you can actually take from here, but this does not follow your trend line. So you are taking the measurement from the ones that follow your trend line, and this right here is the lowest and the first fractal. So if you take that from there to here, that's putting us at about 12,500. Yeah, 12,500. Yeah, I'm gonna start posting more live videos. I'm gonna start doing more live videos so that we talk about this. Harmony of V-chain. As I've said before, you know, going into microcaps now is dangerous. It's dangerous going into microcaps now. I prefer just getting in on Bitcoin now, and I will show you the Bitcoin dominance chart. I will show you the chart, and I will tell you why it is dangerous going into microcaps now. It's really, really dangerous. I'm 30. Okay, so yeah, so there we go. Now, this is something that I want to teach you particularly. How do we start from there? So patterns are actually like following the rules of nature. Yeah, I made a video on TikTok. I will leave it also here on the channel. They follow the rules of nature, and nature do have some secret numbers. So these numbers include the numbers from 1, 2, 3, 5, 8, 13, 21. But so most of the times you will find occurrences in nature following these numbers. So you have to choose one of them or pick one of them that you regularly see on the charts and on your patterns. As I said before, to confirm any trend line, you need price to touch or close below or above that trend line 3 times. That's what you need before you trade or invest or sell based off of any trend line. Yeah, so if it is 3 times, then there should be something about the number 3. Which is why instead of just using the regular Fibonacci retracement tool, you might want to use the trend-based Fibonacci retracement tool. The trend-based Fibonacci retracement tool works by the law of 3. So it follows a 3-wave price projection. It follows 3. So how do you use it? You have to take it from here. So here you have Fibonacci retracement. We have trend-based Fibonacci retracement. Now, after a serious dump like this one, this is your swing low right here. A lot of people bought here. That's why price basically went up. And you have to take your swing high here. So this is the second swing high from this one, yes? So you take from the second swing high, from the first swing high here. No, I'm going to correct that. So you take from the first swing high here and you go to the first swing low. So this is following 3 here, 3 like the Illuminati stuff maybe. So yeah, you take to the first swing low and to the second swing high here. Now guess what price is doing here? Price is having it difficult to go below this ratio. Is it just a coincidence or what's going on? You might ask, what's going on here? Why is it not just going down? Why is it not here? Why is it exactly at this Fibonacci ratio? When you get these types of confirmations, that is how you look at your, you verify if you are right with your arrangement for your Fib or you are wrong. Because you could take from here, you could take maybe from here. This will give you a different price projection. If you take from here, it will give you a different price projection. But you take from here, so you find that price is having a problem, going below here. You find that the 0.618 had an issue here. So price basically bounced off of that 0.618, and the 0.618 in Fibonacci is considered the center of everything. It's kind of like the center of the universe or something. That's where it's like a universal constant, I would say. Yeah, it's a bit difficult to understand these things. They are mostly esoteric and gets to do with beliefs and stuff. But they do work on the charts, so we follow them. We follow whatever works. That's basically what trading is, or what chart reading is. You follow whatever works. So yeah, so you can see price rejecting from here. I mean, this should not be like, it's good that I did this live so that you really see it rejecting here. We are putting this one here. We are putting it here. If you look at it closely, this is the second swing high we talked about. This is the first swing high. This is the swing low here. So you take from the swing high, swing low, swing high. That's how you get your trend-based Fibonacci retracement tool. So this tool suggests that price will retrace to a certain level of these golden ratios. And the one that you should be most careful, or say the ones that you should be most careful about, the ones that you can trade based off of, is the 0.618, the 0.5, and the 0.38 golden ratios. Those are the most important golden ratios. When price closes below them, yeah, it has a very high probability of going to the downside. Now, with trend-based FIP, the 0.618 is also equal to the 1618, yeah, the 1618 Fibonacci, Fibonacci retracement. No, yeah, the 1618 Fibonacci golden ratio, this golden ratio here. This golden ratio states that price will find a way to go there. Now, don't ask me how that works. It's Fibonacci. He said so, maybe. It works maybe because he said so. So what you would notice is that when price comes down here, yeah, you're welcome. So what you would notice, now I'm not using the weeks, I'm using the body of, yeah, with trend-based Fibonacci, you're using only the weeks. You're using the weeks. You try as much as possible to use the weeks to the exact dollar. You try as much as possible to use the weeks to the exact dollar. You can use this on every time frame and you will find incredible results. Now, here is what you have to know. Yeah, here is what you have to know here. When price finds a way to bypass all of these Fibonacci's here, when price finds a way to bypass the 0.38 Fibonacci ratio, bypasses the 0.5 Fibonacci ratio, bypasses the 0.618 Fibonacci ratio, it has a very high possibility of coming to the 1618 Fibonacci golden ratio. So when you see this type of fractal right here, like this one, so this was our target from here. This was our target from here, and this is like no one taught me this one. I'm really this is really something that I found out by myself. When price leaves from here, and this should be the target for this fractal that we are looking at. You can even take from here. Like so. Yeah, so and even at this you will see that this is the larger extension when you really want to look at this as the descending triangle. This will be the larger extension of it. So you find this candle here rejecting the trend line of the triangle. So that has been the entire, and this would have even been looking at the fractal as a bear pennant. Let me show you what the bear pennant is. So this is the bear pennant here. This would have been the bear pennant. So you want to respect price as much as possible. The law of threes, you want to use 3 closes. 3 closes. Yeah. So you try as much as possible to respect it, and it will hopefully respect you. Okay. Now, this is your bear pennant. Okay. So your bear pennant, this is the target for your bear pennant here. You take from here, and you can put this, actually you can put it here, because it went down from the pennant and this is where it is breaking. No. You can put it here because this is where it finally broke to the downside. Yeah. But it gives you kind of the same target from here. But if you are taking the descending triangle, this descending triangle, it should be from here. So this is your descending triangle. So it's basically a structure that looks like so and like so. Ascending triangle will be a structure that looks like so. Descending triangle, the bias is to go to the downside. Ascending triangle, the bias is to go to the upside. But you would mostly find price going to the upside and then downside. You mostly find price going to the downside and then upside with ascending or descending triangles. So okay. So what's our target, eh? What's our target for the descending triangle? Our target is taken from here and then you take this and put here. Yeah, so it's basically the same line. You can see that happening here. Now, here is what you have to know. When price comes down here, it has a very high, it's like a magnet, if you would say. It has a very high probability of going to the 1618 Fibonacci ratio, which would be at $10,000. Yeah. Yeah, it has a very high chance of going to the 1618 Fibonacci ratio, which will be at $10,000. Don't ask me how it's Fibonacci. Price is like bouncing off of them before going to the downside when they break into their zones. So when you have a price structure that is like so, price has a very high chance of bouncing exactly from this golden ratio right here. And when you see that type of bounce from the 1618 or the 0.618 or 0.5 or 0.38, you expect it to go to the other direction of its bounce. And it bounced from here. So I think I talked about this in the Discord group or on Instagram that it should reverse from here because it bounced from here. It bounced from here. This is the resistance here. So you could see this and say it's a bullish engulfing pattern. So why didn't it go up? Because you did not use this Fibonacci retracement tool to see if it actually bounced there or it closed to confirm a possible move to the upside. And this is on the daily time frame, and this is a single candle, which means if we go to the smaller time frames, we'll actually see a consolidation. So let's go to like the 4-hourly, and that is our consolidation between the 0.618 and the 0.786 ratio. So what's our bias here? What's the bias? Do we think price is going to go up or go down? What do we have to check for that? We need to check. What do we need to check? Side. I bought at 16,570. Now, I don't know if people here on YouTube, I always encourage you guys to join in the Discord channel, the Discord group and the Telegram channel, or follow me on Instagram, because there I can give you updates in the moment. It's not every time that I would be chance to make a video, but I can always tell you exactly what I am doing, and you can follow up there. I'll leave the link in the description. I think you would have a link already. So yeah, I bought at 17,100 and at 15,700. Yeah, but these are long-term buys. This is not for now. Like I'm not gonna sell even if it goes to 25,000 now, and I think it's still going to go back down. I'm not gonna sell. So on the daily time frame, that's how you can view our target. And as the charts continue to play out, as the charts continue to play out, or say as price continues to play out, you get loaded with more data on what is to come. And this is also some other thing that you could use as, to see where correct or wrong you are. When you measure the price target like so, you have to zoom out and see if there is any support at all at the zone where you have the target. So we can take this here, and we have a horizontal line. We put that at that target just to mark that area. So we can turn that to yellow. Yeah, yellow. All right. But we are confident we can call this an area of interest. This from 11,688 to 10,300, basically 10,600. That would be $1,000 difference. So we can call this area our area of interest. We can call it our area of interest. Now let's put like I usually use this on okay. Yeah, we can just put it here. You can put this one. We can take this as our area of interest here. So this would be the area where we expect price to bounce from. And you would be like, where would it bounce to? You would expect that it bounces from here, and since you think, not know, that this right here is the maximum zone where we have like strong resistance. So strong resistance will be the 0.618 ratio. Okay, if that we expect that to be the strongest zone of resistance, then we know that price could potentially bounce from here right up to there. But it will find a lot of, it will not easily break this level here, because this was a target. This is the target from here to here. This is a target. So you always have to treat every target as a support or resistance zone when price breaks through it. If price breaks through a target, you have to treat it as a resistance zone. If it's still to go there, you have to treat it like support. So this could be support at 14,276. Price could potentially bounce from here. Yeah, it could potentially bounce from here and go right back up to the zone where it is now, or say go right back up and be deflected at 15,600. So this is what we would expect. This is what we would expect now, but we can see that the daily is already in the undervalued region, but the daily also takes time to play out, so it's not like it's just going to go up from here. We come to the 4 hourly. The 4 hourly is in the overbought region. The 4 hourly is in the overbought region, so we'd expect price to go down from here. Would expect, not that it will go down. So if you want to also base a trade off of the stochastic, it is always preferable to have, it's always preferable to have this, inside of this zone right here. When it's up here, price can still continue to go up when it's in the overbought region. So that's the problem with the stochastic. It can lead you into some issues later if you solely depend on the stochastic to take a trade. It being fast is a problem. The MACD is slow, the RSI is slow, but they can give you more concrete Yeah, they can give you more concrete values. Now, another thing that you could also see from here is this triple top forming here. What would make you good with patterns, or yeah, my own method would be anticipation. If you can anticipate what pattern will play out, that will make you better at using patterns for trading. So from here, this right here is an ascending wedge here. Where will the ascending wedge lead? To the bottom of the wedge, but the bottom of the wedge, it closes to the downside. So normally you would expect it to lead here. But why would you expect it to lead there? You take from here to here and you put here. It's closing below a Fibonacci retracement. It's closing below the 0.382 Fibonacci level. So you need it to come to the downside, to the bottom of that wedge here. To the bottom of that wedge here. This is the bottom. So these are your price targets. That's the first price target. This would be the last one. If it goes down from there, and there, you have it at the 0.5 Fibonacci retracement. But then it closes to the downside of that level. So you expect it to continue going to the downside. Now, all right, let's cancel all of this because it's getting messy. Maybe I should only cancel that here. So we are looking at a possible formation of a bear pennant. You have the stochastic being in the overbought region. And price is consolidating after a dump. Now it's not consolidating and going to the upside, it's consolidating into a symmetrical triangle. So symmetrical triangle is something that looks like so. For anyone joining up now, symmetrical triangle is something that looks like so. So price either comes from the upside and it starts to consolidate into the triangle, or you have something like so and price comes from the downside. Perhaps it consolidated here, comes to the downside, shoots right back up, come right back inside here and consolidates like so. So this is the symmetrical triangle. The target for the triangle will be the distance from here to here. You take this and you put here. If it broke to the upside, if it reaches up here and continues to go up, you know that the next target would be from here to here. You take that and you put like so. This would be the highest point that price could reach if it broke from here. So whenever you are going short or long, you know this should be the highest point where the triangle would reach. So if you are going short and your liquidation is anywhere inside here, you are in serious risk. Anyway, so what we are anticipating that could be possibly forming here would be a symmetrical triangle, because price is consolidating after this drop here. Now, so from here, if we get from here, this is the top, and to here. But I do not think it will actually fulfill all of this because the daily is already in the undervalued. So if, for example, if it breaks from there, if it breaks from here, and it could possibly reach here. And that would be somewhere around 12,000. Yeah, that would be somewhere around 12,000. But that is just you know, me being me. Like, I always like to like look far and see where it could possibly go. What pattern could form here? Could it go up and come down? If it went straight up from here, this would have been a double bottom. So I factor all of that in before I make a move. Anyway, so this is it coming back down here. What if it comes, if it bounces from here and goes back up? You will have a structure that looks like so. So you will have to know that it could potentially go back up here. Wait, is it still muted? Is it okay now? How long was it muted? Still muted? How? How long was it muted? It's fine. It's good now. Okay. But I wonder how long was it muted for? Like where did I stop? Where did you guys stop hearing me talk? 1 to 2 minutes. Okay, all right, then that's perfect. I thought perhaps my microphone. I have a different microphone actually. Where is it? Anyway, so yeah, basically, where did you guys for about 3 minutes? So where did you guys hear me stop? What was I talking about? What was I talking about before it stopped? About 2 minutes. Okay, so all right, so basically what I was saying before the mute. Okay. So the double bottom. Yeah, so I was saying here that if price actually bounces from this region right here, then we have a double bottom. Now that double bottom may not go you know, right up to here, because if you are to take the target for the double bottom, it will put you back up in this region right here. Now the daily being undervalued could actually, you know, propel the price to go back up there, but the daily is a slower time frame before the yellow line. Yeah, so but the daily is a slower time frame, so you cannot expect price movements to happen rapidly using the daily time frame. You use the daily time frame to look a bit far out into the future. The 4-hourly can tell you what you should expect as a swing trader anyway, or before the yellow line. The potential double bottom pattern. Okay, just after talking about the double bottom potential. Yeah, so so if price bounces from here, that will give us the double bottom, and it should be going back up here. But I won't expect expect that it breaks up. It breaks the 0.76 retracement. Even if it does, then I will still expect some selling pressure around here. You put a lot of things into consideration before making any prediction in the near term and in the short term. So yeah, so what we are witnessing here could be the formation if we take from here, if we take a very tight prediction, tight analysis here, and we put like so. Yeah, and we put like so, and we take from here, and we just expect that price should either respect this, and if it bounces from here, then it should be going to the upside. But if it closes down, then it will just continue going to the downside. But we see that the 4-hourly is overvalued, so at the moment the bearish bias still continues. Yeah, the bearish bias still continues to the downside of this fractal. It has not met. This was the first price target here. This is the second price target, so we are looking for price to come down here at about 14,200. We are going to see if this will happen. It may not happen now, since we are live. It may not happen now. So yeah, so okay, let's look at Bitcoin dominance, as I've been saying. So BTC dominance. No, Bitcoin dominance. Okay. Okay, so this is the Bitcoin dominance chart, and it simply is a measure of how much capital of the entire crypto market is in Bitcoin alone. So here you will see it at 39.86. This 39.86 indicates that only 39.86 or 85% of the entire crypto market capital is in Bitcoin. So Bitcoin occupies 39.8% of the market cap. So that's how you can see it basically. Now what I was explaining earlier was that you have to look at Bitcoin dominance, and this is relative to any coin. For example, if we are looking at ADA, a lot of people will only look at ADA USDT, ADA USD, ADA U. But what you should also look at before you are taking a trade on ADA is ADA BTC. How is ADA performing relative to Bitcoin? Is it going up or is it going down? Like here, we can see that ADA is bear flagging. This is why I've been saying that go out of alts into Bitcoin, because we can see a bear flag happening before us. Yeah, I hope when you see this now, you can just identify it like I did, because it's really easy to see when you are familiar with them. You get to see them easily. So yeah, we can see ADA bear flagging even on the now. Oh god, ADA is going to hell. ADA, yeah, ADA, what's the I'll look at that. So we can see that ADA is overbought here, and it is bear flagging. So you have a bear flag and you have it being overbought. Yeah, this is relative to Bitcoin. So it's performing well now relative to Bitcoin, but it has a bear flag and it is grossly overbought on the daily, which means ADA will be coming down drastically at any moment, together with every other coin, every other altcoin basically. Most of them, they will come down, and yeah, it won't be good. And you can see that on the weekly it is undervalued. On the weekly is a bigger time frame, so you would expect it to, be undervalued for quite some time before it goes back up. So let's go back to the Bitcoin dominance chart. So Bitcoin dominance, yeah, this is the daily, and it shows here that it's still going to continue going down for some time. So I expect, now I drew this some time back. I drew this, I don't know, this has been like 2 months, I think. I drew this some time back, and right here you can see an ascending broadening wedge, and you will find it going down. It bounced off of here. Why did it bounce here? This is what we have learned already just now. You can see it bouncing here. Why? Because that is the bottom of the ascending broadening wedge. That is the bottom. But the pattern's target is pointing it down to another figure. Where? Yeah, so the pattern is pointing it down here. But what do you see? What do you see it doing here? It's going downwards in a descending wedge. It is going down in a descending wedge. What will it do after a descending wedge? The bias for a descending wedge is to go to the upside. The bias for an ascending wedge is to go to the downside. So eventually I see Bitcoin doing this. I see it doing this. Why did I put this here? This will be a cup and handle. No, but this is exaggerated. This will mean that Bitcoin will be going to 85% of the total market cap. But who knows? The markets now, I think Bitcoin is going down, and I think it could really be on purpose by some big players. They want to find a ways to sell their alts for Bitcoin in a way that they could get more Bitcoin if they sold. So they are keeping alts afloat. That is what I believe is actually going on. And a lot of people don't notice this difference. They think Bitcoin is going down and every other coin is going down. They don't check on I'll check that. So they don't really notice, they don't see that this may be the only time to shift from alts into Bitcoin. If Bitcoin dominance is going down, it means the fear has not really stepped in. The real fear, it has not really stepped in, because when it does, what people will do, what investors will do, is they will sell their alts for Bitcoin. We just checked on ADA a moment ago. So if they sell their alts for Bitcoin, and let's say you were an ADA holder and ADA is doing this, if you sell for Bitcoin, ADA will go down here and will also go down here. Yeah, so what is actually happening now is people still are not afraid. Like, the fear has not kicked in and people are still holding alts. That's basically what is happening. If Bitcoin dominance is still low, it means fear has not kicked in, and when fear will kick in, you will see Bitcoin dominance going up. That will probably push Bitcoin's price up. The other day I was talking about canceling a short position, and the reason for that is because this coin USDT was being unstable. When it's unstable, people will seek to hide, or say will seek to flee into a much more preservable form of their value. So if you fear that USDT is going to do the same as USD, like go to zero, you're going to find a way to hide your funds. That's why I talked about going into BUSD. But if that becomes a problem, people are going to go into BTC, because at least they can, have peace that BTC will someday go back to its all-time high and they will get their money back. And so that's why I think price actually went up. That's the reason I think price went up. I don't think price went up because there was no fear in the markets. No, fear of the dollar going up. No, I think the price went up because people were actually leaving USDT and going into BTC for fear that BTC, USDT will go to the downside, like USD. Yeah. Well, I don't know. I don't know when alt season will be back. I don't know when the bull market will be back. I don't. No one knows. We can only estimate what could happen. Yeah. So if we go to this indicator, this is the hash ribbon indicator. I think I talked about this some time ago. Hash ribbon indicator. Where is it? Oh, this is on Bitcoin. Okay, so where is it? Okay, now this is the hash ribbon indicator, and the indicator has really been right a lot of the times. This indicator shows minor activity when the hash rate increases. So it is generally assumed that when hash rate increases, Bitcoin's price tends to go up. And it is showing a buy signal here. Why am I even... Where is the other... No, I don't believe that NFTs and the metaverse is dead. I think it's just a period where they may not do well, but they will obviously do well later. I don't think the NFTs and the metaverse is dead. If I am not convinced of that. I don't think it's time to declare that they are dead. They are not. We've seen a lot of times when coins or tokens act like they are dead, and they just spring back up from nowhere. I mean, I learned from Luna and Dogecoin that it going down in price by even 80%, 90%, it does not mean that they are dead. They are not dead. So this indicator is actually showing that, is showing a buy signal that the time has come for accumulation, and it's been right a lot of the times. We can see it here in 2018. It was right this time, and it was also right this time just before the bull market. It was also right this time, and it is now also showing, and this was on buy the other time. What's happened with it? It was actually on buy. It disappeared. This was on buy, and this is also on buy. This also showed a buy signal here. What happened? So I think we may go down and accumulate, and prices may stay for a very long time without change. Yeah, this is showing buy here on the daily time frame. Yes, on the daily time frame. I skipped the time frames. So this is showing a buy signal here. So maybe it's time to, but this hash rate, it measures miner hash rate, and Ethereum miners, some of them went into Bitcoin. So it would be a bit, it may not work this time, who knows, because it is basically calculating miner hash rate, and the hash rate is increasing because Ethereum miners went into Bitcoin mining. ETH, let's look at ETH. A lot of people are asking about ETH. So Ethereum actually has not broken its daily support. Bitcoin has. The descending triangle that we were looking at on Bitcoin, you know, the same thing has not played out for Ethereum here. It actually bounced off of its daily support, as we can see here. So, and let's look at ETH BTC. ETH BTC. So Ethereum is actually doing very well against Bitcoin. And we have an inverse head and shoulders here, like so. After an inverse head and shoulders, or after a head and shoulders, always expect price to come to the downside of the shoulder. Always expect price to do this here, because people will create long positions here and their stop loss will be somewhere around here. No, people will create long positions at the neckline when price breaks to the upside. So you'll mostly find futures traders creating long positions here because price broke to the upside. They'll have their stop loss somewhere here. If we go to an earlier time frame, there will be some swing low there. They'll have their stop loss somewhere here, so price will come to the downside and then go back up here. But the volume is also decreasing here as price goes up, so this is a bearish divergence here. I will not trust this kind of pump. I would not think it's going to go up with the volume decreasing here. That's how you detect a divergence. And when you see this divergence, it means that this can just immediately go like so, and Ethereum will do badly compared to Bitcoin. I think the time will come when Bitcoin will start to, you know, a lot of people will start to capitulate and Bitcoin will get maybe constant or start to go up, while all altcoins start to bleed heavily. I don't know where that is, the donation section. I don't know. So yeah, so Ethereum has not lost its daily support. Its daily support is still here. What do I think could happen here? Let's see. So we see this. We see this here. I've not analyzed Ethereum actually. Let's look at it. So we're going to analyze Ethereum together and see what's going on here. So we have a potential double bottom here, but this may not play out as we understand. Let's take the stochastic. Okay, we have the stochastic ready. What is this? Stochastic. Okay, so we have the stochastic RSI here. Let's try to measure what Ethereum could do. Okay. Now you can use your trend-based FIB and see where it is lagging here. Trend-based Fibonacci. So you see that Ethereum actually came up to the 0.382 Fib level here, and it also bounced right from the 0.68 Fibonacci retracement, Fibonacci ratio here. So you can see this kind of price action, yes? So we could actually expect a consolidation here, because it is these are the strongest, a rectangle. So these are supposed to be seen as the strongest, these here. All right, so you always have to view this area as the strongest area where price can either bounce or, yeah, when it's inside here we would expect a consolidation. But here we actually see something funny now on the daily, don't we? We see a bearish divergence. That bearish divergence led to the fall. And we see price bouncing off when we have the stochastic beginning to go back to the upside. So let's go to the, but if we have this, go to the 4-hourly. On the 4-hourly, we will have a good bear flag on the 4-hourly. Yeah, a bear flag on the 4-hourly with the 4-hourly being in the overbought. Bitcoin and Ethereum, all of them are in the overbought region. Now we can do a trend-based Fib. We cannot analyze a micro cap. You cannot analyze a micro cap. You cannot be analyzing stratos. It's I am going to post the interview with what that I have with the Stratos founder. Yeah, I'm gonna post the interview with him on YouTube pretty soon, so be on the lookout for that. Now we do expect Ethereum to come down here to the 0.618 ratio. To the downside, the farthest that we can see for Ethereum now would be $544 per ETH. $544 per ETH. Now this right here could be seen as an ascending broadening wedge. Ascending broadening wedge would be like so. This will be the ascending broadening wedge. Let's try to see if we will have any confluence with the Fibonacci ratio suggestion. No. We have from here to here, and if we break that, yeah, if it breaks down here, so if it breaks 800, then we will be expecting 500. But on Bitcoin, that same ratio on Bitcoin would be this. So let's see where we would expect Ethereum to be when Bitcoin would be, or where Bitcoin would be when Ethereum is at $500. Now this is really raw. I've not done it before, so this is, even I am excited to see where the price could go now. So at 10k Bitcoin, Ethereum will be at $500. For $10,600, Ethereum will be at about $500. Yeah, Ethereum will be at about $500. If we come now to this daily here, this daily time frame, to the longer term projection would look like so. Longer term projection, trend based FIB, all-time high, pandemic low, zoom back up here. Is it even? No. You cannot do an update. You cannot do analysis on. You cannot do analysis on micro caps. $3,838. This will be given the 0.618. 0.618 is about $29 to $38. Okay. So for now, the lowest we will be expecting here for this drop, the lowest we'll be expecting will be the 1618. 1618 will be $10,000. Will be $10,000. That's the most we'll be expecting for this drop. For this immediate drop here, that will be the most we'll be expecting here. On the weekly, what would this give here? Why are so many people so interested in Ethereum? Where do you think its price target might be before the next bull market? So on the weekly, the target for this double top on Bitcoin is 14k, 14.66k. Now this is the reason why I start to talk about accumulating, because what if you're wrong about a prediction because you saw it on the daily, and it turns out it happens that the price action was following the weekly, but even if the price closes here, this will still give it a bearish pattern. Yeah, what's the bottom for your prediction on ETH? Well, according to the charts, for now, what we would expect for Bitcoin will be 10k, then what we'll be expecting for Ethereum will be $500. So yeah, so between these prices, I should have made most of my accumulation for Bitcoin and Ethereum actually. The very low targets are like moonshots, like if you are right, then you will really get a lot of it. But if you're wrong, you don't want to be wrong. That's what you have to understand here. You don't want to be wrong. If you're wrong, are we going to 10k before 20k? Well, 18k is very strong resistance right now, because 18k is here, and it's not even, I mean, it's the 0.618. That 0.618 is also the support, was also support for the descending triangle here. So that would be pretty hard to break, if you'd ask me. Yeah, but apart from that, we are seeing 10k being the bottom for now. That is what we can see in the charts here. Yeah, there are other patterns actually that point below 10k. We'll probably talk about them later, but for now we could easily bounce off of here, because this drop is because of this that we are seeing here, this fractal. This is where the drop is coming from, because we keep bouncing off of its targets. So we have to also use it as measurement for where our bottom might be. That's the short-term bottom anyway. Yeah, the short-term bottom, that's where we want to be looking at. That's what we want to look. But if we look at this right here, if we want to follow this fractal here, where will the bottom be according to this? Where will the bottom be? Breaking it here, that'll be somewhere around 8,000. Around here. This will be breaking the 0.618. So for now, with this current price action, given that the daily is undervalued, I wouldn't be so, hopeful about, 3k coming in very quick now. Yeah, you want the daily to be undervalued, to be overvalued, before you are making predictions for a longer, maybe making longer predictions. If you think the price is going to go to 3k now, when the daily is here, on the stochastic anyway, remind you that the stochastic is slower, and on the weekly is faster. On the weekly, the stochastic is still overbought. Now this is scary, to be honest. This is scary, because if it's overbought here, then Bitcoin still has to drop this kind of by this kind of measure that we see here, and if that happens, we're going to 3k very quick. Yeah, we'll be going to 3k very quick if that is what is going to happen. But if we are dropping and we are still seeing this overbought here, then I don't know where we'll go next, because this really spells disaster. That's really, really disastrous. And usually when I talk about these price targets, I only ask what's going to happen to push the price there, because there will be something, that the news has to use for as reason for this, because they can't say that Bitcoin had a bear flag or Bitcoin had a descending triangle. The news has to use real things. This is like not real. So yeah, so there will be trouble. Just like now, one of my followers reached out to me on Instagram and told me that his funds are locked in FTX. So you see that it's really going to affect people in the real world, and this is a real problem. Yeah, it's gonna cause a real problem. So my heart goes out to all the people who are going to lose to be in serious losses, or who are going to, I don't know what they will lose if Bitcoin is to go to $3,000. Because if it's going just here to 8,000, then something else will happen. Even just here to the target of this fractal here, if it's just gonna go here to 10k, that something will happen for sure. I don't know, maybe they will start a war, or so the Illuminati will start a war. When do you think it will go to 10k? Now that is what I do not know, and that is what I tried to estimate time, and I was so bad at it. Knowing when it will go is what no one can know. That can be anyone's guess. I can only predict relative to price action, not calculating exact timing. I don't know. No one can know, to be honest. No one can know. Well, some people do astrology. Maybe they can know. Anyway, I hope you guys learned something from the lesson today. And we've looked at Ethereum, we've looked at Bitcoin, we've looked at its dominance, we've looked at the trend-based FIP. We've talked about the fact that Bitcoin could, settle down somewhere, and altcoins start bleeding because they are seriously overbought. It could really be a problem in the longer term, this whole saga. It could really resolve in a bigger problem, because alts being overbought now means that they still have to drop drastically. So I see a real problem coming. That is why I am not buying any alts now. If alts are doing better relative to Bitcoin, it simply means that how many Bitcoins you will get now, or say how many BTCs you will get now, will be more relative to the time when Bitcoin will be higher by market cap, by dominance, will be higher by dominance. So if BTC dominance is low now, it means BTC occupies a smaller part of the crypto market capitalization. So this would be the only time to secure your capital, still remaining in not selling directly into dollars. If you're selling into dollars and Bitcoin for some reason goes up with the rest of the markets, then you've sold the bottom. So what you do then is you sell into Bitcoin. You go to the BTC trading pair of any alts that you're holding and sell the alt for Bitcoin instead. That way, if the market starts to go up, it will be going up when you are in a coin that can also increase in value rather than staying in the dollar. So that is the better way to do it, in my opinion. You get into BTC, then later on you can always sell that BTC for any other alts that you want to get. By that time, the alts would have been extremely low, relative to Bitcoin, so you can get more alts. It's literally a game plan. It's a very good plan. Is it risky to get BUSD than USDT? Wait, what? Is it risky to get BUSD now that USDT is unstable? That's what you're trying to say. For once, you have to understand that no stable coin is safe. Nothing is really safe in crypto. Nothing is really safe. The only safe way to keep your funds is by storing them in a hardware wallet. That's the only way. Cold storage. That's what everybody should be talking more about. Keeping your funds in cold storage. But the problem with that, though, is if you lose your seed phrase and lose your wallet, or say you just lose your seed phrase, that's a problem there. Self-custody is a real problem, and I think that could really be a good niche in crypto. I was looking at a coin called Coin98. Is it Coin98? C98. It's a wallet, but this was I think it's tied to the Solana ecosystem. It's tied to the Solana ecosystem, I think. And coins that are in the Solana ecosystem, you should be very watchful for now. Serum. Serum was a DEX, I think, a DEX in Solana. And Alameda Research is the main liquidity provider for Serum. It's a decentralized exchange. And you should be very watchful of coins like that. Serum, Polygon Matic, Near Protocol, Solana. You should be afraid to touch any of these coins now, maybe for your long-term holds or anything, because they were greatly involved in them. Even USDT, they had like majority of all the USDT ever made by Tether. So you should be really wary of coins like this. This is why I say micro caps or even just small cap coins, you should be careful with them, because this would look like a descending wedge. Yes, this would look like a descending wedge, and you would expect that it should have something happening soon, like so. So you would expect that it goes up like so, and yeah, you make profits. No, if Bitcoin dumps anymore and Bitcoin dominance starts to kick in, then you will have something that looks like so. So that's what you have to understand. Yeah, sorry. All right, so yeah, so that's the end of our session. I will come online some other time, and we will talk more and markets and what we see happening. Let's go to Bitcoin 1 hourly time frame and quickly see what could happen, say, in the next hour. First, we see that the 1 hourly is undervalued. It's undervalued, and no, this is the same coin stuff. So BTC. Yeah, BTC's 1 hourly is undervalued, but the blue line here, this blue is crossing the yellow from the top. Example of what you would call a death cross in moving averages. So here on the 1 hourly, we can easily see this as so. Yeah, it wouldn't really look much like it, but it's it. So from here, we will see this as an ascending broadening wedge. You could call it a head and shoulders. So where would price lead to next if it broke down from an ascending broadening wedge? The bottom of the wedge. So we still expect BTC to come here, to come to this level here. This is BTC now on the 1 hourly. We are just finishing up to see what could happen. Can you quickly explain how you made? Oh, how is this confusing? So basically, shorting or longing in a trade simply means you are betting. You're betting. Yeah, I know a lot of traders and crypto investors don't like saying I'm betting or I am gambling. Well, to say gambling means you just hope on luck. You hope on luck, but you use some calculations though. So basically what you do is you bet that the price is going to go down. So for example, we are here. We see this as an ascending broadening wedge. Ascending broadening wedge means the bias is to break to the downside. And what you also have to notice here is that as the price is going up inside of this wedge, what is happening here in the stochastic? The stochastic is going down. So this high right here, this is the first high, yes? This is the higher high, higher high. This is the high. This is the higher high from this one. Some people ask me some questions sometimes, and it's good that I just explain them. It's understanding crypto anyway. So you have this high, higher high, higher high. Okay, so after this high, you have a low. After the low, you have another high. After this high, you have another low. After the low, you have another high, and so on and so forth. So this first high here is high 1, high 2, and high 3. Okay, so high 1, high 2 is higher than higher 1. So it's a higher high to higher 1. Higher 3 is a higher high to higher 2. So you have a low, a higher low. So low 1, low 2, and low 3. So low, higher low, higher low, high, higher, high, higher high. So higher highs and higher lows. Now, what happens? These, as price is going up, you'd expect that the volume should also go up, meaning that the how would I put it? You want the momentum of this price action strong, which means people are actually buying into this asset, and the price action that you're seeing is not like, it is legit. I would put it that way. So when you see the price going up like this, you also expect that the volume should be going up. The volume, these volume bars here, you should see higher volume, and you should see the stochastic here also going like so. You don't want to see it going like so. You don't want to see it. You don't want to see it going like so while price is going like so. You want to see it going like so. Now, what you see here is not this. What you see here is this. You see price going up, but the momentum that is pushing price up is dropping. So if this momentum is dropping, then you expect that price will return to the downside at some point. And why would you expect that? Because you see that the buyers, or the, let's say, traders pushing price to the upside, are reducing as price goes to the upside, which basically means the price action is becoming fake. So you want price to you would expect price to go to the downside as it continues to go up at some point. So you don't want to see this. This now is called a bearish divergence. The opposite of it will be a bullish divergence, where you will see price going down and the momentum is also going down. Now, if, for example, if now price breaks this, okay, now if price breaks this to the downside, what do you expect? You expect it to go down by the same distance from here you'd expect that price goes down by the same distance from here. I always use where the candle touches the trend line. Now, in smaller time frames, you can use the wicks of the candles, so you can put your candle like so. Smaller time frames like the 1 hourly, the 30-minute, the 15-minute, you can use the wicks, because here you are really trying to catch price action, so you don't want to miss out. Now, if you use the bodies, you won't miss out actually, but you want to gain as much as possible, because here you'd most likely be scalping. So from here, you expect that price should go as low as this as it breaks this, and look at it, it went as low as that. Yes, so if you put a line here, it went as low as that. Now, if let's say you were trading this, if you were trading this, you would come here and you measure this from here to here. So this is 5%. Yes, this is 5%. Now 5% here means that if you were betting that price is going to go to the downside, and you had say $100 and you were betting with $100, okay, and on 20x leverage, this simply means you will make 20 times 5%. So that, okay, for example, let me put you the how it actually works here. So let's put here. Okay. Okay. So this is how your standard. But note that it will not stop here. That's what we have to note. It will not stop here. Why? Because it's an ascending broadening wedge. It will go to the lowest point, of the wedge. That's the bias. If it breaks it, it goes to the lowest point. If it can bounce from that lowest point, if you can have very high volume on the bounce here, you are confirming another bounce for it to go up here, and this will be a double bottom. Okay, so these are all the things that you have to consider. You have to be thinking about them. These are for people who trade patterns, and by the way, so if you're not trading patterns, maybe it may be a bit easier for you or something. But if you're trading patterns, then you will have to factor all of this in before you make one move. Okay, so in this situation, you are making these gains here. Okay, so in this situation, you are making these gains here. You are making the difference. You are making the difference of the price drop. So this price drop here is by 5% approximately. And you were trading this on, say, 10x leverage. 10x leverage would be 10 times 5. 10 times 5, 50. So you're making 50% gain if it actually dropped to this level down here. If it instead did not drop and went up, and let's just say this is here, okay, so you have your stop loss here. Your stop loss is 2%, and it goes up and takes your stop loss from here. Then you will take this 2% times your leverage, which will be 20%. So your initial capital was $100, yeah? So if it takes 20% of that, then you'll be left with $80. You've lost $20. If it goes down to your mark here, it will be 50% gain because it has gone down by 5% here, and you are on 10x leverage, so 10 times 5, which will be 50% of your initial capital. So you are gaining $50 on this trade right here. I don't know if you understand. Yeah, so that's what you're gonna gain. Now, so if it comes down here, you are gaining 50% if it comes down here. If it goes down by, say, if it goes right down to here, that's 10%. Yeah, so it will be 100% gain on 10x leverage if it went down here. So 100%. So this, if it went down right down to here, it will be 100% of your initial investment. Your initial capital was $100. So it will, yeah, so it will be 100% here. So you have made 100% of your initial investment, which will be $100. So you are coming out of this trade with $200. $100 as gain, $100 as initial capital. So that's what we mean by I made 200% gain, I made 400% gain. It is just the difference, the percentage difference by the leverage then factored into your initial capital. Your initial capital will give you how much you're actually taking back home. If this was $100, you are taking back $100 home. If this was $1,000, you are taking $1,000 home. If you lost by 2% on $1,000, it means on 10x leverage, it means you are losing $200. Yeah, so the leverage is simply trading with money that is not yours. It's trading with borrowed money. Yeah, that's what leverage means. You're trading with borrowed money. It's not your money. It's borrowed money. It's the market maker's money. Okay, so yeah, so when you say I was trading on leverage, 10x leverage, it means you're trading with your money 10 times. When you lose, you're losing like you had your money 10 times. You gain like you had your money 10 times. Basic stuff, but the best way to understand it is the gain or loss by percentage difference. So if you gained 5% difference here, this 5% we will call 5% raw. Now in futures trading, 5% raw is seen as, you know, a big deal, because you are risking here. You are really risking here. It's not just like buying crypto, because here you are buying you're basically buying the contract. You're not buying the actual coin. So you're buying what you will not even have, by the way. It's just buying a contract. You're selling what you don't have. So yeah, so you're actually losing real money here. If you just bought Bitcoin and it went down, well, you have the actual coin. You can sell it later, you know. But with futures, you don't have it. It's a contract. You don't have the real coin. So yeah, so it's really dangerous. That's why I've really never talked about. I'm thinking of making a full course on futures trading on this channel. Yeah, we'll talk about where it even came from, why it's called futures, you know, what leverage means, what margin means, all of that stuff. I think we should actually make a course like that on the channel. The video on Fibonacci is on the channel. Yeah, if you just search on YouTube Fibonacci retracement or Fibonacci by understanding crypto AV, you will see it there. Yeah, so basically that's how it happens here. It's just basically trading with money that is not yours, making percentage difference and times the leverage that you're using. So the higher the leverage, the more you stand to gain and the more you stand to lose. On 10x, on 20x, this trade just from here to here, 5%. On 20x, this would be 100% gain. Okay, on 40x, this would be 200% gain. On 80x, this would be 300% gain. So the more the leverage, the more you will gain. And that only comes back to how much percentage, how much difference did it move by. So if it moves by 5%, you gain more on higher leverage. If it moves by whatever percentage actually, but you stand to gain more on higher leverage than on lower leverage, just as well as you stand to lose more on higher leverage, because here on 20x, this 2% move here, if price went up, you're losing 40% of your initial capital. So if your initial capital in this case was $100, you're losing $40 and you're left with 60. That's why using lower leverage is better, because you stand to lose less. Though you stand to gain less, but you also stand to lose less, which is better. That way you can gradually build your portfolio over time. But just going into higher leverages is a fool's errand, because you could say that you would have a tighter stop loss, but tighter stop losses means that price will easily, you know, stop you out. And I see stop loss as a waste of money. Stop loss is simply why you lose. If your stop loss is here, for example, that's like 15%, yes, 15% to the upside. But the market is primarily bearish right now. It will take a miracle for Ethereum, or no, for Bitcoin to immediately go to 20,000 right now. It could happen, but the likelihood of it happening is actually less than it going to 10,000. So that is what you have to be factoring in here. If it's to go to 10,000 here, that would be a 34% move. No, not 34. Okay, let's just say 10,500. That would be a 39% move, about 40% move to the downside. And so you're risking losing 15% raw. Let's say this was on 2x leverage. Yeah, 2x leverage to, if it goes to 10k, you are making on 40%, that you are making 80%. But if it goes to the upside, you are losing 30% on 2x leverage. So yeah, it's a good bet, but you would stand, it would be more difficult for you. The likelihood of you losing because it came up here is lower than you winning because it went down, because the market is primarily bearish. So the entire market is primarily bearish. Anyway, so as I was talking about the stochastic here, this stochastic here, we will see that this right here, this is the high. So when you look at this high and you look at the stochastic, what is the relative index, the relative strength index of this high here is already in the overbought. So we would say, yeah, it's strong. But the next one is here with a lower, because if we compare that, it's already getting lower to like here, where we'll still have a high here. So this is already a bearish divergence. If you have that in an ascending broadening wedge, you know that we are headed for a drop somewhere. As I said, the ultimate target for an ascending broadening wedge, or any broadening wedge, or any wedge whatsoever, rising wedge, any wedge to the upside or downside, is the top or bottom of the wedge. So we would expect price to still retest the $15,700 area anytime soon. It could come with it could come with a lot of volatility and sharply bounces off of there. So if you are to buy, it would be good to just have your limit order open if you want to buy at that level. Not financial advice, of course. So yeah, so that's the end of our session. We will talk about price again some other time when some moves or some data is revealed to us by the charts. Thanks so much for watching, and see you